Hello, this is a short video that covers the Market Alert Service. Some standard disclaimers: investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, enlistment with BSE and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Okay, now to carry on. The Market Alert Service is helpful for traders, especially swing traders, to gain an edge over others by forming a deeper understanding of the underlying index positioning. This service is complementary to any existing trading methodology currently used by traders. For this video, I am using the 23rd September expiry of the Nifty Index as an example. However, these steps can be replicated for the Bank Nifty or other derivative stocks. The time and date for reference can be seen here. I am assuming you have signed up for the service, have received your credentials, and have logged in. I recommend you follow this process flow before market open. Briefly, the process flow is 1. First, check the ADR trend. 2. Then, check the strategies deployed at the end of the previous trading day. 3. Add the support resistance levels for your chosen index and expiry on your charting software. 4. Finally, check the gamma exposure position from the previous trading day. By following this process, you should have a clear understanding of where the market is positioned pre-open. You will get an idea of whether there are familiar strategies being deployed. For example, if you see straddles. You will also see the strike at which they are bought or sold. You will get a firm idea of at what exact levels. The straddle limits should range between and be able to determine long-term and short-term market trends and direction. Now let us delve a bit deeper, and I will explain these steps in some detail. Firstly, we go to the blog page and search for the ADR tab. Here we click to open the chart. This chart shows multiple trend lines for the yearly primary trend, monthly secondary trend, bi-weekly and daily minor trends. You can select the time frame best suited to your trading style and draw the slider below to give a narrower view of the time frame. Selecting or deselecting the timeframes on the right will toggle the chart. The upper and lower bounds are marked with horizontal lines, as well as a mean value horizontal line for that timeframe. The mean is not a midpoint of the upper and lower bounds. Just for clarification, reading the direction of the line, as well as where in the trend cycle it currently lies, will give you an indication of where the market is currently in the trend cycle and where it might move to. The title of the chart also gives the same info if you do not want to read the chart. This chart is updated continually during the trading day, and any change in direction is pushed to the Telegram group. Next, we review what strategies are deployed at the end of the previous trading day. For that, we go back to the blog page and search for the Strategies tab. Now search for the index and expiry you are trading. Like I've mentioned before in this video, we are using the 23rd September expiry of the Nifty Index. So, clicking on that page will give you a list of all the previous closing day strategies for the trailing trading days. Important if you want to see how the trading has evolved for this expiry. Clicking on today's entry, we see a chart that tracks the change in open interest across the strikes. By reading this chart, we can see that today might be a range-bound day. Seeing that what seems to be a straddle being sold at the 25,200 strike. We see more puts being sold at that strike, implying that this put wall will resist a break below 25,200, and once we mark the levels from the next step in this process. we will know where exactly the inner and outer bounds of this straddle are. We can then either exit shorts at 25,200 bound if we already have a position in the market, or we may choose to go long if the 25,200 bound is reached. Now we move to mark the support resistance levels in our charting software. I use investment.com to chart the Nifty at 15-min intervals and have already marked today's levels to save time. The levels can be read from the blog page by searching for levels. Here once again, depending on your time frame and preferred index or stock that correlates with the index, you can find calculated levels. There are 3 upper levels and 3 lower levels and a midpoint. You might like to mark these and monitor them during the trading day. When these levels are approached, you might also want to exit or take contra trades. However, if these levels are breached, especially with volume, you might find that a range-bound day is now a trending day, and sellers are going to go for cover. Be aware that supports when breached become resistances and vice versa. Today's supports are at 25,038 and 25,078 on the downside, and resistance is at 25,325, 25,362, and 26,003. The midpoint of balance of the market is at 25,541. Finally, we look at the gamma exposure or JEX charts. Go to the blog page and find your index and expiry under the JEX tab. Here you will find 3 types of JEX charts. One based on open interest, the overall positioning of market makers. The next based on changes in the open interest, to show what positions were taken fresh. And lastly, the net open interest change. This is a netting of the buy and sell in the change in open interest to give a clearer view of the smart money position going into the market opening. The JEX charts are read differently from other open interest type charts. Here the assumptions are that when there is a call wall, it implies that market makers have provided or sold calls in response to market demands for calls. However, as the spot moves towards that call wall strike, market makers will prefer to not add to their already sold positions and instead will buy calls to reduce their exposure. This will also happen as the spot approaches a put wall. Here you can see a calls sold by market makers at 25,200, and they will buy calls if the spot approaches 25,200. Consistent with the strategies reading from the previous step. These moves keep the market range-bound. Unless something changes and the market breaks support resistance levels with volume, then the JEX range will also break, and the market will trend. You might like to use the JEX ranges to enter or exit your range-bound trading strategies. After going through these pre-market open steps, you should now have a deeper understanding of the market positioning, trends and levels, and possible directional moves before the market opens. Be aware that overnight news will affect the information, so use the information with awareness of these factors. To complete this example, the reading for today is that for the 23rd expiry, the Nifty should be range-bound between 25,200 and 26,000. And resistance levels for today for the 23rd expiry, 25,325, 25,362, and 26,003. While the support levels are 25,038 and 25,078. The Nifty for today should rally strongly. If it reaches 25,200, it would be a good opportunity to go long. I will pause the video here at pre-open, and at the end of the trading day today, I will resume the recording to review the day's play, and we can verify if the pre-open market signals were respected. Resuming the video, it is now after market trading hours, as you can see here. Reviewing today's play, we can see that indeed the market analysis levels were respected. The market did have an upward bias and gapped up at the start of the trading day, but found resistance at the first 25,325 level itself, and spent plus minus 10 points around this level for nearly the entire day, closing at 25,530. Perhaps this was to be expected given the Fed decision expected overnight, and perhaps because the overall low volatility level of around 10. Clearly, a single day's market analysis outputs are not absolute evidence of continual accuracy, but it does reflect a higher than normal probability of the market respecting levels and trends. The market analysis service is to be used complementary to your own market reading and analysis. This service only supports your market analysis, not your trading abilities. Good market analysis is a necessary but not sufficient condition for profitable trading. The key to monetizing this information is you, the trader, aggregating your trading style, strategies, knowledge, and experience, and supported by quality technical market analysis. This video on the market analysis service explains the use of the alerts before market hours, at pre-open. Please also do watch the video on the options Signal service to know how to use the alerts from that service, provided during market hours, to trade the Nifty and Bank Nifty with a higher than normal probability of an edge over other traders. If trading is not your cup of tea, but are more interested in building a balanced portfolio for medium to long-term wealth generation and have a higher risk-taking ability, you might like to review the model portfolio services instead. With that, we will end this video here. Please share your feedback after logging in if you are an existing subscriber. If you are not yet a subscriber, but are an experienced trader or investor looking for a sharper edge in the market, consider signing up. You can do so from the contact page. Thank you for watching. Trade often, trade small.